Okay.
Cheers. Thanks, Sheldon. So welcome, everyone. Thanks for joining us this morning. Had some good numbers. So, yeah, we've had to set it up in auditorium format. Sorry about that, just to fit everyone in. For those that aren't sure, just if you need to use the toilets, they're just past reception on the right. I've also got Andrew and Gordon at the back there. Most of you might know one of them. So they will no doubt be getting any questions that you ask me. So single touch payroll and ATO is a big brother. They kind of tie into each other a little bit. So I'll get started with the single touch payroll. That's just a disclaimer, the usual thing. Don't worry about that too much. So yeah, going to cover this morning single touch payroll, the ATO's data collection basis generally, some audit activity we're seeing at tax office level, and also a superannuation amnesty that they brought out. Hasn't quite come in, but I thought I would cover it anyway. So just firstly with single touch payroll, is anyone here using it at the moment with their workplace? Yep. So far, so good?
Yeah.
Okay. So Phil, yeah, okay. Feel free to ask questions throughout all of this, and if you've got any other experiences through any of from what you're doing, happy for you to share them with everyone else. That's good. So what is single touch payroll? High tech, it's just a name given to a new reporting process at the ATO. So they have many reporting processes. This is the latest and greatest that they've brought out. It actually, it came out, It came out just over 12 months ago. So employers with more than 20 staff have had to be on this since 1 July 18. So they're just about through 9 months of it. But the rest of the country, anyone with 19 employees or less, are being forced, for a better word, to go on it 1 July coming. So it's coming in whether we like it or not. Why are they bringing it in? So from the government's own words, they're bringing it in to amend laws relating to superannuation to improve the integrity of the super guarantee system and to improve PAYG withholding tax compliance. Also, they're bringing it in for greater transparency, and we hear this a bit, to help ensure a level playing field. So I think their super audit activity has found that there's quite a lot of employers, rightly or wrongly, not quite paying the super or paying it on time. So I think they see that where they talk about ensuring a level playing field, if there's some employers of identical business, some's paying super, some isn't, then there's probably perceived that someone's getting a bit of an unfair advantage there by not having to shell out super for their staff. Not to mention they probably get caught down the track anyway, but yeah, it's all designed to try and make everyone equal. We'll talk about Big Brother later. So what the main change is, so with under single touch payroll, every time we carry out a payroll event, a weekly, fortnightly, monthly, whatever it is now, that activity is automatically transmitted to the ATO in real time. So that's the long and the short of it. The current process, so what everyone has been doing for decades and up until 30 June this year, this is for people with less than 20 staff, and it applied for people with more than 20, which came in 12 months ago. So what's been happening, so employers submit a payroll information via their quarterly or monthly BAS. That's the W1, W2, all the bookkeepers and internal accountants in the room will know about. So then at year end, you'll do your group certificates up or the PAYG payment summaries for each employee, and together with an annual summary, and send that off to the ATO. So that was either done through your MyOb or Xero or QuickBooks program or whatever program you're using, or you can actually fill them out manually, you might recall. So that was the old process, and yeah, all about to change. So what's happening now, so payroll information, as I said, is electronically sent to the ATO at each payroll event. So this session is not going to go through how that happens. I'm sure, like MyOb and Xero all software providers, QuickBooks, your industry-specific programs, I'm sure have been in touch, and because they've been using this for a while for the bigger employers, so they're at the core for all this. So if you've got a mainstream software program, then you're 99% there already. So for those, can I ask, what do you guys use it? MYOB. Has everyone been contacted or had some kind of email out or flyers or distribution about single tax payroll coming, and they've given some instructions already, or not quite yet? Have they said it's coming, the instructions? Okay, so it's not quite, it sounds like it's not quite rolled out as such, but stay close to your providers is the take home here, because they're the ones that, like Xero will be a different format to a MYOB, which will be a different format to a QuickBooks, which will be different to Translogix or whatever program you use. So all we can suggest, if you haven't been contacted, or you have been, but they're, the information or instructions are still coming, then I'd get onto them.
And just on that,
Yeah.
we've had numerous emails from MYOB to attend workshops
Yeah.
or what have you to set it up.
Yep.
Probably for a year or so at least.
Yeah.
And we tried to book into one of the courses, but it was completely full.
Oh, really?
So they put us through to someone else, and who worked us through it on the phone. It was actually really quite simple.
Yeah.
And we've pretty much got one-on-one over the phone now.
Okay.
All set up.
Yeah. Look, that's our understanding, that they've been pretty proactive. But if you've got a provider that you haven't heard much yet, then get onto them. But yeah, from what we understand, it's not overly onerous. Is that a fair comment for those that have started it already? So, yeah, the main pain will be with those that are not used to a software program. So if you've been on a program already, MYOB, Xero, whatever it is, then I think, yeah, you guys will find it's relatively seamless. The software providers will do it all for you in a way. But it's for those that have been using the manual cash book, or a program that doesn't have payroll function, they're the ones that are going to probably take a bit of getting used to and need a bit, to change their processes a lot more than what they've been doing now. So yes, so when you do a payroll event, the event doesn't change. Whether it's weekly, it'll still be weekly, fortnightly, it'll still be fortnightly. None of that changes. So the ATO will get it by their means, and they will just keep year-to-date totals each time the event occurs. So we're told they won't keep an individual payroll event data. Maybe, yeah, their IT doesn't provide for that, but it probably might prevent people ringing up and saying, I've lost my payslip or something. You guys apparently have got it. But so they're saying they don't have it, they just have year-to-date. So no more issuing of POIG payment summaries or sending anything to the ATO at year-end anymore, which is probably a good thing. Employees will be able to access their pay-as-you-go payment summary via MyGov. So if they're with a tax agent, oh yeah, by the way, they're now called income statement. So they've gone from group certificate to PAYG payment summary, and now they're going to be known as income statements. So hopefully that stays put for a while. So for those, yeah, all staff that have with an accountant or tax agent, we get that information or transmitted to us via the tax office automatically. So they wouldn't have to go onto MyGov to download it. We would have it all automatically. But for those that do their own tax, then that's really the only option, we believe, is to get onto MyGov. If you haven't already got an account, you'd have to register to get that. So a few changes there. So after the last payroll event of the year, employers will be able to adjust or correct a year's payroll information before notifying the ATO that it's completed. So they understand, everyone understands that, yeah, some mistakes can get made, overpayments, underpayments, whatever it may be. So they will give you the chance before close off, I assume, before the payroll year is closed, to do a reconciliation or to correct any errors for any staff before hitting that submit button. So we obviously haven't seen what that looks like yet, but we're having, myself and Gordon were having a bit of a hunt around yesterday. We believe it's just one more click one more button to press after where you'd normally hit submit payroll or pay staff or whatever it may be. It'll come up with saying, are you happy for this to be submitted to the ATO? So that's where the payroll providers come into play.
So
Yeah.
if we were to start this new process now, for example, at 30 June this year,
Yes.
would we then be able to just go in and put the totals for the year so that...
You mean start it in
so
March?
we would start it to start in March,
I
the new system?
don't believe you could.
Okay.
I don't know, but I...
Yeah. So for these guys that have started just a couple of months ago,
It picks up the year to date.
it picks up the year to date?
Yeah.
Yeah.
That's why we did it.
Okay.
Yeah.
Yeah,
I'll
that's
get-
what I'm thinking is a good idea.
Yeah.
When you're in the system. Yeah.
But you were on the system already because you had more than 20?
No, we only started about a month ago.
I see you voluntarily
We've
Yeah.
voluntarily
started early.
before.
Okay, well, there you go. There's the answer.
Yeah, that's good.
Okay. Good to know.
Thanks.
So yeah, you get a chance to fix anything up before hitting that final submit button, and that's obviously pretty crucial because that's what your employees will be doing tax returns on. So you need to fix up any anomalies there. Super funds will report to the ATO when you make super payments for staff. So that, I'll come to that a bit more, but that might have been happening, I'm not sure, but it's going to be real-time stuff now. So
what happens in my case, when
Yep.
I've got a self-managed super fund,
yeah,
and I transfer from my business account into my self-managed super fund account. That,
yeah, self-managed funds, they're a little bit of a different beast. I don't know, to be honest. I don't know if Andrew or Gordon, do you know what happens with self-managed?
A lot of the self-managed funds, and I'm sort of speculating to a point here, but they work a lot electronically now, so a lot of the software that's used is all cloud-based to maintain each side of things behind the scene. So it might happen automatically through the sort of bank feeds and software that the actual fund use internally here. But
I'm not sure. We can check with Roger, our super director. He might be on top of more of what's going to happen. We'll probably let you know, Kevin. But yeah, super self-managers, they should be all the same, but the reality is they're not. So we'll be keen to know how the tax office get their hands on that info. It might not be as readily available as it would be like an AMP or an MLC retail fund. But
you know, I just transfer it from one end of the
Sure.
account to another end of the account.
yeah. Yeah, I'm not sure. We might have a look into that to see how they're setting up. But it's a good question. So yeah, big one. The regular information can then be cross-referenced by the ATO with Centrelink, Child Support, other government departments like State Revenue Office. I mean, this happens already, but the kicker is it's going to be very live for them. So before they might have had to wait for a financial year to find out an earnings for someone for child support purposes or wait till someone lodges their tax return. Nowadays, yeah, well, it's going to come in that they can just see it any time, any part of the year that they can see what someone's earning. So it does prevent anyone probably playing funny buggers to some degree. There'll be people that try, no doubt. For new staff, they are saying some software providers are working on trying to get the TFN declaration so you could submit it online. I don't know if that's you, Maya, did you say?
Yeah, I haven't.
Anyone come across that yet? Xero does it already? Okay. Has that done it for a while, Mitch? Or? Okay. Yep, that's good. So they're becoming more and more automated, but yeah, the TFN declaration is still required for new staff. It's just how you submit depends on who you use, obviously. So what's not changing? So pay cycles, as I said, nothing changes there. If you're weekly, fortnightly, still going to remain the same. You can opt to change, but this is not forcing a change at all. Still having to remit pay-as-you-go withholding still via the monthly or quarterly BAS. So the W1, W2, that's not changing. Still having to remit the 9.5% super guarantee for staff. Super stream is not being affected by single touch payroll coming in. That's the reporting and paying super is remaining the same. Due dates for payments, whether it be for the superannuation cut-off dates for the quarter or the BAS due on the 21st or 28th, nothing's changing. And you still need to issue pay slips to staff at this stage. So what do I need to do to get ready? So really, as I said at the start, you just need to keep close with your provider. So mob zeros. Yep. And as I said, if you haven't heard any contact or been given any training options for these providers, I'd make contact with them because it's not too far around the corner. Is anyone here not on a payroll program already or software program? I think most of the country's now pretty automated, but there are inevitably a few that aren't still. Check if you're paying employees correctly. I guess this is a good chance to just stop and make sure your payroll systems are good. Because yes, now ATO is going to get things in live time, so you're probably better off to get it right than to create any unnecessary hassles. So get your wage rates correctly, make sure it's all set up so you're calculating and paying super correctly. Just a bit of a health check for your own payroll system, really. So the ATO have realised that not everyone's on a software program already. Everyone can be a little bit different circumstances. So they've come out to give some pretty generous exemptions or concessions. The big one, well, not a big one, but this has only come in last week. So this is hot off the press. They're providing a 1-year exemption for what they call closely held payees. So a lot of us in the room here are probably wearing two hats. They're wearing business owner hat and employee hat. So you pay yourself from your trust company, whatever it may be. You're closely held payees. So if you've got a relationship with the payer, so your family members, for example, are getting paid through your business, a shareholder of a company that's getting paid through your business, they call it non-arm's length. So fair chance that if it's your business and you're paying your family members or associates of your family, you're deemed to be closely held payees and you get a 1-year holiday from this. What they are saying is they plan to bring it in after the 1 year, that it's a quarterly reporting system. I'm sure in due course they will move to make you pay yourself and submit the info like everyone else in the country. But for now, they're giving a bit of relief for this because I guess what the ATO are saying also that it's not the usual payroll process when you're an owner. You can choose to pay yourself drawings and then that might be this much in 1 week, this much in another week. So it not a fixed amount like it would be for a normal staff member. Sometimes you don't even know what you're going to declare as wages until you might see your accountant at tax time or planning time. So they realise that it's a bit different to the standard employee and are giving everyone a holiday, I suppose, from complying. But it'd probably be a good exercise to start anyway, because if you can get into the habit, then when they do put the hammer down and say, right, from now on, you're doing what everyone else is doing, it's not going to be a surprise or going to have to change systems. But that's handy. So for your micro, so what they call small employees is less than 20. They're calling micro employees when you got between 1 and 4 employees. So again, they're realising these smaller businesses probably don't even have a software program. If they do, they might not have a payroll program attached. So they're saying you can get your tax agent to report quarterly for the first 2 years of this system. I don't quite know yet, maybe Gordon and Andrew can help me out, what that quarterly reporting process is going to look like yet. We haven't done any yet. I'm not sure if that means just via the BAS, the W1, W2 on the BAS, or is there going to be a separate report to fill out? I don't know if you've heard anything.
I haven't been on to speak to the BAS or
Yep.
taxation report.
Yeah. Yep. So there's a 2-year holiday for those. And the ATO have also published a list of providers that have designed a simple, low-cost solution. So they had requirements that the solution needs to be, I think, less than $10 a month. It needed to be user-friendly and a few other things. They didn't want people going and designing some hard to follow whiz-bang systems and expecting someone with 2 staff members to get on there. So I've been on, and that's a comprehensive list. They do include the MILBs and the zeros, the ones we all know about, but there are some others. So they might be better suited. So for small employers, so probably a lot in this room, they've given until the 30th of September 2019 to actually start reporting. So although they're telling the world it's 1 July 19, which it is, on the other hand, they're saying, but we're going to give you 3 months to start, which is pretty generous, I think. So if you haven't got your act into gear and everything's set up by the 1st of July, I guess the message is don't panic, because they're giving everyone another 3 months. Again, probably good practice is to start now and get it cracking by 1 July, because you're just delaying the inevitable, but that's a bit of relief if you're having problems. They have said they will likely request grant deferrals for people that are still having problems past 30 September, but that does need to be done on request, say via ourselves, for example. But they seem to be pretty, pretty friendly. A lot of things they come down pretty hard on, like a hammer the tax office with changes, but this one, they're giving everyone a bit of allowance, I'd say. And another handy one, no penalties for mistakes, late reports for the first year. So it's also handy. Who doesn't have to do this? So they're saying those businesses, I think the hardship really comes under the next two, to be honest. So if you're in an area which doesn't have internet or has unreliable internet connection, you're likely to be in that boat where you don't have to do it at all. And I'm sure that's probably going to apply more to regional areas. It might be a hard case to argue if you're in Perth CBD and saying you've got no internet, but I think they're coming out and saying, yep, we realise if you're in the middle of the Sahara Desert or something, you're probably not going to be able to do this. So I don't think anyone here is in that boat, unfortunately. Other payroll obligations, so this is just paying generally. What we're saying, it's quite a change that's come in. So it's a good time to take stock and see if you're compliant being an employer. So have employment agreements completed, have tax file number declarations completed for all your staff, cover them for workers' comp, meet the 9.5% super, meet any other employee obligations that you might have, like leave and whatnot, pay to at least award levels, and we're suggesting hold inductions for all the above. Occupational health and safety has become a big buzzword, I suppose, over the last few years. We've got a HR, in-house HR manager who gets updated on all the cases that are going around the country, and it's just a world of litigation. People want to sue for just about everything these days, so I guess don't put yourselves at risk with that area. I'm sure all of you are covered with that already, but that's just a time to have a bit of a stock take. Before I move on to the ATO powers and data collection, does anyone have any questions on single touch payroll? I mean, it's a broad overview, but that's kind of what it is and what the message they've put out to everyone. So as I said, each software provider will have specific instructions on how to set it up and how to process a payroll. But as far as what it is and what you've got to do, probably doesn't look too scary, I hope. It's probably one of a few more things that they're going to make us automate. So, but look, lean on your software provider, lean on ourselves. Yeah, so just don't get caught short, I suppose. ATO data collection powers. So single touch payroll is just becoming... No?
When your income doesn't match your lifestyle.
Yeah. So yeah, the single touch payrolls is forming part of their stable of information they can gather and will be gathering. So look, for a while, we've known the ATO have pretty powerful reaching powers already. So they've known for a long time when you sell a property. So Landgate, ATO talk to each other. Over the years, we've had quite a few cases where we've received letters for the client, for a client saying the ATO have written to them basically saying, we know you've sold a property at such and such address on such and such date. They've got the information from Landgate. All the cases I've been involved with, it's just been a case of that's their main residence, so there's no issues, but they're really just sniffing around and poking to see if someone's sold an investment property or a rental property and forgotten, or just been a little bit tardy with declaring a capital gain or something like that. So that does happen. Probably a capital loss more than a capital gain these days. Income doesn't match your lifestyle. So we also know of cases where if they are reviewing high net wealth individuals, and I think they have a dedicated department at the tax office just for this, where they have information from motor vehicle licensing. So if they're targeting or just having a general review of a high net wealth individual, and they can see if they own Lamborghinis and Maseratis, but they're declaring taxable income of $23,000 for the last 3 years, or they have a legitimate question. And they do ask the question as how, we know you own this, we know you own this yacht, tell us how you're only earning that. A lot of it might be legitimate through structures and trusts and other things, but yeah, some might get a little bit caught out from not declaring income they should be. They're all just after extra tax dollars from any of this. Deposit income from overseas, it used to be a 10,000 limit. I think it still is, where I think banks have an obligation to report any foreign earnings of any foreign deposits of $10,000 or more to the ATO. So more often than not, there's nothing dodgy going on, but that just gives them a cause to make an inquiry. And a lot of these inquiries won't come the month after or the year after you sell a property. A couple of examples we've seen about the sales, it's happened like 3-4 years after. So the ATO aren't that switched on and don't have that many resources to check recent stuff. But if I'm saying 4 or 5 years down the track is not uncommon for them to start chasing you up. And transacting in shares. So through publicly listed ASX data and that, they know when you're buying and selling shares. More often than not, they wouldn't act on anything, but I suppose if they've got cause to look into you for one reason or another, or your business, they can get a pretty good database. So through us being a tax agent, we already get information, we suck it down from the ATO. They already know what bank interest you've earned, what dividends you've earned, what your health insurance fund is, what premiums you pay. So that's automatic information these days from banks and all those parties, health insurers. But yeah, if they're targeting an industry, so motor vehicle industry or whatever industry, construction it might be, they do have extra powers to start sniffing around and digging deeper into things other than what I've mentioned. So now with single touch payroll, they will know what super you should be paying, who you should be paying, to who, which fund. So as I'll touch on, super is a big audit area. They've collected, I had it noted down, I think 451 million, rings a bell. So since 1 July 18, so only 8 or 9 months ago, they've raised $451 million in unpaid super. So it's obviously with the ageing population, they're getting concerned, their pot's running thin, so they need people to have their super funds ready to go. And if employees aren't having that super paid in, then that's a real concern for the tax man and the government. So that's why they're pretty proactive in the area of superannuation not being paid. So, yep, super audits have been happening for a while, but we feel that might crank up now because they are going to know that what someone's 9.5% is that should be hitting their fund in 20 days' time. So they'll now know quicker if you're late with super payments, and they'll know what someone's income is quicker. So they knew it anyway, but it took them time before. Now they're going to know in live time. Just with the super payments, look, I suppose as an office, rightly or wrongly, sometimes if we saw that you as a business might have paid a quarter's super late, but it was paid, look, technically, I can say, I hope there's no microphones on, but I do have one on. I should shut that off for a second. Technically, you're supposed to pay by the cut-off date. So 28th day following the end of the quarter, you're supposed to have your super in. If you're a day or two late, you're supposed to do a superannuation guarantee charge form, which means you're still supposed to pay that super, but it then gets paid to the ATO instead. There's an interest charge put on it, there's an administration fee put on it, and it's not tax deductible. So it's kind of, they hit you pretty hard if you're late with super. So as I said, in the past, if you're a day or two late, it probably wasn't the end of the world and we didn't put up too many hands. But nowadays, I guess us as accountants, tax agents, our hands are going to be forced because they know, they're going to know when you paid late and they're going to know what you should have paid. So there's going to be minimal opportunity to back out on completing a super guarantee charge form if you're late with super. That's probably the take home out of this. So whatever you can do is pay your super on time. Audit activity. So at the start of this financial year, the ATO did come out and said they're going to focus more on work-related expenses. Something like $7.9 billion in work-related expenses were claimed last financial year. So that's a fair swag. So obviously, if the tax office can get a small percentage of that, where people have claimed wrongly or they're claiming without receipts or invoices, then that's a fair bit of revenue that they claw back. So that's why they've made it a target just for this financial year. It might extend, but they've come out and specifically said for those people that claim home office or claim car or claim work-related tools or something that don't have the backup, they're going to disallow. So where we as an office have been a bit more careful than we have in the past by making sure people do have that backup, because we're probably just possibly asking for trouble. Continued focus on small business capital gains tax concessions. So that really applies if you sell a business or sell a property relating to business. I'm not sure if anyone's had any exposure to these concessions in the room, but they're very, very generous. If we can get concessions, we can get some big capital gains tax bills down to zero from applying these. But the ATO have come out and said we will pretty much guarantee to get an audit if you claim them, because they're seeing a lot of practitioners or clients that might be doing it themselves are getting it wrong. They're highly technical. So yeah, an audit area for them to pick up a bit more revenue from wrong claims, and continued focus on super guarantee, as I just mentioned. That's not going to change, we don't think, anytime soon. Okay, so some recent audit examples. So these are from our own office that we've had probably in the last few months. So we had a client where had a small business in furniture retailing, had an ill parent, so obviously the mind was elsewhere and helping out mum and dad, missed the deadline for a superannuation quarter, but once got back on their feet and got the bookkeeping cranked up again, they did end up paying the super, and it was only a couple of months late, so it wasn't like they missed it and didn't pay it at all, or they paid it a year late. They paid it as soon as they got themselves back into gear a few months late. Got a random audit 18 months after this happened. Look, and super guarantee audits might be we're sceptical, but are very rarely random, we think. Fair chance, if you've got a super audit, you've probably got a disgruntled employee or someone that might have left and is not sure if they got their full super entitlements. that's more often than not how audits start in the super world. You might get a random audit, doesn't say it doesn't happen, but it generally might come from someone who's not happy, or they've left and just checking a few things. So unfortunately, that opens up a can of worms, and they start auditing everything from the super world for your business. So for this one, the super guarantee forms were prepared as a part of the audit. So it was a requirement, we had to do that when the tax office wrote the letter. But the outcome was 6,000 interest charge payable in addition to the actual super. So not only had they paid the super and you can say tick the box for their obligation, they got hammered with $6,000 as pretty much like a penalty. And they got interest charge calculated from the date, from the due date, which is say 18 months ago when the super was due, until the lodgement of the super guarantee form, say 3 months ago. Look, we fought this one on a few bases, but lost. Yeah, there's some areas where they say the Commissioner of Tax has discretion on reducing penalties or waiving penalties or just softening the blow, so to speak. And there's areas where they don't have any discretion whatsoever. And this is an area that they said they don't have discretion. It's written in black and white in the legislation. They're not allowed to reduce. So it's really, really harsh. I think the super itself, Gordon, was only probably less than that, was it? Or about...
$8,000. And the important thing with this one is technically if that super had been paid 1 day late and we only lodged this SG forms 18 months later, you pay interest on the total amount of super that was outstanding for that 1 day for that full 18 months, which is where that $6,000 came from.
Yeah.
So regardless of the fact that the super had been paid, you're still paying interest on it.
Yep.
And the objection that we lodged was on the basis that it had been paid, but it was denied because the legislation specifically saying that it doesn't matter. And the ATO officer that I spoke to said he thinks it's ridiculous, and the ATO themselves say it's ridiculous, but their hands are tied.
Call it immoral.
Yeah.
So the super itself wasn't like, we're not talking 20 or 30,000 super. The super itself was under 10,000, or it was probably about that amount again. So they doubled their bill, really. I guess. Yep, it's sad and it's horrible, but I guess it's a take-home message. We've really got to watch the super. Another one was similar again. Internal bookkeeper had left the business, so they'd missed 2 quarters of super. ATO audit got triggered. I think we suspect possibly a phone call in. So like the last case, the super guarantee charge forms still got lodged. Super was paid. But in this case, they had to, within the amount they had to pay, there was an eligible termination payment someone left, which doesn't normally attract super, but given the audit had commenced and given the forms that were required, that payment then formed part of what they had to pay super on. So I don't want to get too highly technical, but to cut a long story short, would have saved quite a few dollars had they paid the super when they could. And that's sometimes easier said than done. But having the audit triggered and having the forms prepared meant they actually had to pay more than they were going to pay in the first place. So that was a bit of a hammer as well. The ATO are pretty ruthless. Not related to super, but just a bit of a message of the data collection powers the ATO have. So in this case, husband lived in the UK, but was a tax resident here in Australia also. His partner lived in the UK. He had a private health insurance with HBF, I believe, here. In the husband's tax return, disclosed that he's a couple for Medicare levy purposes. So just quickly, you pay Medicare levy based on whether you're a single or a couple based on your taxable income. So that's why they want to know about private health cover. And the ATO could see from immigration records that the wife had not been in Australia for some time. So the outcome of this is, I think Medicare levy had to be paid when initially it wasn't. But again, the take home is they can get information from any source to try and back up their point, and they had a win on this one as well. Okay, so again, on probably harping on super, but single touch payroll is just the reason it's come in is super is a big part of it. So the ATO, or the government, came out about 12 months ago to say that they're going to bring out a super amnesty. So anyone that had unpaid super way back from 1992 to March 18, so it's like, it's 26 years, it's a fair swag of time. They were going to say, right, we're going to let's fix it up. If you voluntarily disclose and pay the shortfall, we'll waive the admin fee, which the admin fee is like $20 per staff member per quarter. So I guess if you're many years late over many staff, that can provide a punch as well. So they're going to waive that, and the best part, they were going to make the super payment tax deductible. So as I said before, if you pay super late, then technically you lose your opportunity to claim it as a tax deduction, which can hurt. So they were going to come and say, fix it up, and we'll give you the deduction, and we'll let you do it for 26 years of super, which is pretty generous. Unfortunately, it hasn't passed as law. So even though they brought it out about 12 months ago, they've been sitting on it, and I believe with the election coming, they don't think there's enough, I think only a couple of sitting days left or something for that law to actually pass. So it's highly unlikely that law is going to pass. The government, or the ATO, realising that people have probably got confused. Some people have actually gone and said, well, part of this amnesty, we will fix it up, assuming the law's coming in, and the law's not come in. They've gone and said they're going to waive the penalties. So people that had put up their hand and said, I had some back pay, super, fix it up. I don't believe, it's not tax deductible, unfortunately, until this law comes in, which we don't think it will. But some consolation is that they are going to waive any penalties for people that do. I think the end game from reading the commentary around this is saying, well, super is still an obligation anyway, so you shouldn't just pay because we've brought out the amnesty. You should pay because you have to pay. It's law. Any questions on any of that? Anyone had an audit here themselves? No? Good. So anything on single touch payroll or super? Hopefully everyone's up to date with super. So, yeah, the super will continue to be a target area for them, we feel, just because of the fact that they're running out of their pot to pay everyone's their age pension and all the other government benefits. So they need the kitty up. Yeah, sorry.
There'll be a change where you need to report full pay super monthly as you do your PAYG.
PAYG can still be quarterly, so that's an option. You can choose. I haven't heard anything. I don't think anyone's heard anything. They're bringing the quarterly back to monthly. You can choose to pay monthly, I think, if you wish. But I haven't heard anything to suggest that it's going to come in compulsory.
So Glenn, why, this is completely sort of apart, why are businesses having to collect tax on behalf of the ATO and pay superannuation? Wouldn't it be easier if they, we paid our employees the extra pay that they have, and it goes through to the ATO and they
let the staff do it?
Business, and it doesn't come back on us to
do
all this compliance. I know it will never happen.
Yeah.
Why? Because they don't compensate business for the extra.
Yeah, I know. Good question. I think just they're probably being realistic. I think if they think they'll,
easier for us to do it than
it is. If they left it to the 15 million employees to self-report their own, or self-pay and report their own super. They're probably realists that it won't happen, and they're putting an obligation. Yeah, it's an obligation on employers.
Without any compensation, get it back to
Not really. No,
No,
not really. No,
with
you're
accountants,
obliged to
you
withhold
would
tax
keep
for them.
in-
You withhold to pay super
Yeah,
for them. But
so we're really just tax collectors, aren't we?
yes, you're an important cog in that chain.
Okay.
Yes. No, I don't think that's changing anytime soon. So yeah, love it or hate it. I don't know how it is in other countries, mind you. If anyone's got any experience how it is in other countries.
New Zealand's pretty much the same.
New Zealand, same. Yeah. So onus is on businesses and employers to do the jobs for them. Yep. Any other questions? No. So that was probably not a too long of one. As I said, oh, there you go. Yep. Get onto your software providers. It sounds like that we do know of the Mob and Zeros. I keep coming back to that. And the QuickBooks are the main providers for small business offering training. All we can suggest is, get along. But there is some leeway. If you're not quite ready by 30 June, we've got a bit of a holiday. And I assume the providers, if they're booking out rooms with their training sessions, you'd like to think they just keep putting on more and more sessions. So everyone's up with it. Look, if anyone's interested, we have a good relationship with Mild and Zero, specifically in Byfield. So we are looking at possibly getting them in to run some training sessions for the likes of you guys who use them. So yeah, let us know if that's of any interest, because we don't quite know what sessions they've been holding or what they're offering, or if they've had any when they're coming up. So yeah, we're more than happy to get them in here and run a session on more finer details of what it will look like to actually set it up in those programs. So if that's of any interest, maybe shout out to us. Yeah, Jared?
Then on Zero now, we've got the capability now with the facility to do the BAS logins from Zero.AT.
Mm-hmm.
What does the ATO get? Just the summary of the normal things that you can complete on the BAS statement? Or can they also get access to the GST calculation data?
If it's submitted online, I'm pretty sure it's just the core data, like the G1 and so on, G10, G11. I don't think they would have the space to have everyone's behind the scenes info. I really don't. Yeah. So I'd say they just the totals they would get. Yep. Has anyone here ever had if they've bought a piece of equipment or a car or a truck or something, had a GST, call it audit, but it's more just saying, we notice you've got a bigger refund than usual. Please explain. Yep.
One of the companies I was working
Yeah,
for,
that's
had
quite.
to go through send all our backup.
Was it a bigger month than usual? As far as you bought something big, that meant a big
Yes,
refund
had,
came back?
We had some tax concessions, some fuel tax credits
Yep.
that we claimed.
Yep.
We hadn't claimed them, so we went back retrospectively and claimed them in one period. But it was for a 3-year period, so then
Sure.
flagged the audit, so
Yes.
we had to just send all our backup in. And we had our records, so we just scanned everything, sent it
Yep.
through. It
Yep.
wasn't too
More often than not, if the question is due to a bigger than usual refund, then it's a fair chance you've bought something which you would have a tax invoice for. So it's just a process that they want to see it and they'll go away.
Well, we had a phone call when we restructured that business, sold it to
Mm-hmm. Yep.
hardware. Then there was a huge discrepancy with the difference of the amount of reporting.
Yes.
So that was just a simple phone call that they put through.
Okay.
There's big difference.
So it was all resolved easily.
It's actually quite good to deal with usually when you've got extra.
Yeah.
But yeah, no, I think.
Yep. Yeah, the ATO aren't that scary. They can be frustrating. If we're trying to achieve something or get something over the line, you ring up once and you ring up 3 minutes later for some reason, you'll be impossible to get the same person, probably get the same state, you'd be lucky. So they aren't scary, they're doing their job. But it's more if you're not doing the right thing, they have teeth. I suppose they have the ability to escalate to different departments that have a bit more expertise and a bit more teeth. But a lot of the people you tend to deal with there for run-of-the-mill day-to-day stuff, probably
So
younger people ticking a box.
Yeah, you flag as soon as something just doesn't
That's right.
fit with the normal.
That's right. Yep, they've got their like when they try to say they target cash economy, they've got their ranges for different industries of what they say your GP or sales or profit should be within X range, and if you're well outside of that, there's potential they'll ask a question. So, yeah, Gordon or Andrew, did you have anything to add that I've not covered?
When in some cases with a sale of commercial property or a business, going concerns not provide, the tax office will wait to see the seller remit the GST before they'll actually issue a credit to the buyer of a business or property. So they generally match that stuff up before they fund the money.
Yep. Yeah, that's true.
So then that capital gains concession, they're looking at that quite.
If you claim the concession, so when we lodge the business return, we have to put in appropriate fields that we're claiming those concessions. That is their trigger. Just seeing those fields completed is their trigger to ask a question. So more often than not, we'd like to think if you're going down that path, you've got some decent advice and there's nothing to worry about. But they're after some backup as to show me how you've ticked all those boxes and you're eligible for meet all the criteria. And if you can prove that.
And your advice is that that advice comes from you.
Yes, I would. If you're not getting the advice, or maybe you might be missing out on some concessions in the first place. But yeah, we're generally pretty careful to claim them properly because we know it's an audit area. Yep.
I think the whole ATO Big Brother is just continually expanding. Like, it started with SuperStream a couple of years ago, and now it's moving to single touch payroll. They've got another reporting thing which businesses in certain industries like building construction and just recently transport industry as well, and IT, and cleaning, where we have to lodge those reports have to lodge, or those businesses have to lodge reports at the end of each year, just stating the amounts that they've paid to contractors. So, and then that flows through again the data matching side of the ATO. So they're continually expanding on the different ways in which they collect data. So it's just obviously becoming harder and harder to miss anything or to hide anything.
Not that we would, hey. No, but yeah, it's right. Technology is driving them to do all the things that they're doing and probably going to do more. So watch this space, I suppose. Yeah, if there's no other questions, thanks for coming along. Hope you got a little bit out of that. If you have any questions afterwards, and give your contact here a buzz and we can hope to help you out. So thanks all. Have a good rest of the day. Thank you. Cheers.
We'd like to have payroll and paying ourselves. Keep us in touch. For example, this one and chose not to call wage through payroll system. So what happens if I skip a month? Yeah, just fill them in a zero. I think you can. I think it will let you put in in zeros because you'd still be accruing your, because technically you should be still accruing your entitlements. So I think it would let you put through a zero pay. I'll have to try that, but I just was thinking, yeah. You didn't process it. Yeah. No. Well, yeah, so I'm like, do I? Yeah, I mean, I haven't started yet on single tax pay for us. So now I'm thinking, well, given that we're closely up, do we just leave it for the year and wait and see what happens? See we've got that year.
I mean, but it's more to, the thing is,
information off through my office, that's good resumption.
Yeah. Yes. Already submitted it. Yes.
Yeah, absolutely.
Yeah.
creates the unnecessary.
Yes. So. Yeah. So we've got that year